I'm Cathryn Chen, founder and general partner of MarketX Ventures. We're a global investment firm focused on investing in fintech, deep tech, and vertical SaaS. In the past, we've invested in US, Asia, Southeast Asia, and recently started investing also in parts of Middle East and also Europe. So in the very beginning of our venture, we started out as a fintech platform, secondary market for pre-IPO shares. And then in the past 2-3 years, we also launched Aurora Technology SPAC, which is backing Asian and Asian American founders. Recently, we're about to de-SPAC a $200 million company. And then lastly, we also have a DeFi platform that's right now in Zug and Bahamas. So that's the three things I'm doing right now. And love to talk about anything deep tech, fintech, geopolitical arbitrage.
And Cathryn, anything to add on the macro picture?
So I spent 200 days on the road. I'm based in Silicon Valley, Miami, and then we also have offices in Zurich, Singapore, and then now I spend a lot of time in Abu Dhabi, Riyadh, Saudi. So what I see is that there's a tectonic shifts in terms of investing in parts of the world that previously people would not. So thanks to the latest banking blow up, you can see SVB, Silvergate, Signature. We invest both in traditional Web 2.0 world and also Web 3.0. So we can see there's quite a bit of a shakeup due to SVB. We have 60 portfolio companies and half of them bank with Silicon Valley Bank. And obviously when the whole crisis hit, us along with 500 VCs in Silicon Valley signed a pact that we said, despite this, we will still work with them if they can figure it out, because here's the thing, most people don't realize, given that 40% of the startups in Silicon Valley bank with this one company, if they go down, then obviously a lot of people are in trouble. And, honestly, this whole thing, the bank run was created by, some, not so great risk management by SVB, but also, this was coming because the central government decided to adjust rates so fast, right? And we know that this issue has persisted for quite some time. Last night, having a really great discussion with Larry and Charles showed us, on both sides, how startups view this whole, chaos crisis and how central banks, think about the situation. What we have noticed is that actually show the resilience of the startup ecosystem, because within a few days, everyone got together and fixed the problem. Granted, it did come at a cost of, others. We want to see the startup ecosystem keep, blossoming, and especially during this current relatively difficult geopolitical era, right, with US and China coming in play, and what's happening with Taiwan, what's happening with Russia. So a lot of what we see is how do startups, founders come together and really build a more resilient system where difficult times are coming ahead of us. We tell all of our portfolio founders the next 10, 20 years is going to be a lot harder for you, both as an operator, but also as fundraising, right? As you can, imagine, founders would typically be able to raise $10, $20 million from Silicon Valley. Now, guess what? Since last August, a lot of people have stopped deploying because everyone believes the valuation is too high. The overall macroeconomic system is not great. So a lot of VCs have stopped, which created a massive problem for companies that are actually doing well. However, they're part of this entire batch of startups that are being affected because of the current macros. So overall, as we look at companies in early stage, so we do early stage fintech, deep tech, vertical SaaS. We also look at growth stage special situations where there's an obvious opportunity to invest in amazing companies with sound fundamentals. However, they may have, encountered a problem with their valuation, and therefore they're willing to actually now accept 30%, 40%, sometimes 70% discount in the secondary market. So on our platform, we kind of see both sides, early stage and then later stage. And guess what? This is not the first time. I was at a conference in 2014 in Portugal, and they asked me the same question. I feel like my answer is kind of the same, right? Times like this, we go through, highs and lows, and we will see the stronger companies survive through this another crisis.
To pick up on your point on Silicon Valley Bank, I mean, as you said, I mean, we could have had a very catastrophic situation there, but obviously that was averted. But obviously there's been a lot of focus now on the kind of second order impacts. I mean, there's a lot of discussion about the credit lines and everything else. How do you see that playing out? I mean, is that something that will be resolved relatively quickly as the banks step into the space, or is that going to take a lot longer to get back to normal, so to speak?
We actually didn't have any exposure to SVB, so our portfolio companies, some bank was First Republic, some bank was SVB. But to kind of answer your question on the credit side, I think what I've noticed is that, with Silicon Valley Bank being the biggest lender for a lot of the startups, now they're gone. I think there actually exists a huge opportunities now for people who are doing venture debt. So that's one thing I've noticed. For us, we're kind of alternative manager. We've done both direct buy and sell, but we also have a lending product which allows existing founders and also employees to basically borrow against their shares. So this is like a very typical thing in Silicon Valley. It may or may not be the way in other parts of the world. For example, we went to Asia, and when Grab was doing well, the Uber, of Singapore, we actually launched their first secondary liquidity employee product. So allowing people to borrow at a certain percentage LTV so that they can have some liquidity before the company goes public. So I do think there are a lot of opportunities now exist in the fixed income space, even for private markets, right? A lot of people can see, in real estate, you can borrow against what you have. However, in private markets, very few people can do that. So with MarketX, we've launched 2 products. One is actually allowing folks to borrow against your holdings in the private markets. On the other side, we actually do this on the blockchain. So allowing, folks to tokenize real assets, but at the same time creating a lending product on top of the actual holdings they have. So I think now there's actually more opportunity for people to look at, what is the post-SVB era, who is going to be the major players in the space.
So we'll get on to the actual investment opportunities in the asset class itself, but just to wrap this up on the fundraising side, I mean, again, another huge theme we're seeing this year is obviously private wealth fundraising. So I think that tying that into tokenization and the potential there. Cathryn, can you talk a little bit about what's happening there? I mean, we're seeing this across private capital, but what's happening in VC specifically in terms of how much is being raised from that segment?
I think for VC, from your report, you can see, right, people are still obviously raising. I mean, Tomo Bravo has just raised the largest fund. So since then, I'm now in Miami, where a lot of San Francisco VCs have moved. We also see tons of interest from Asia. In the past, since 2014, when we established MarketX Ventures, we work with pretty much all the top founders from Alibaba, Tencent, Ctrip, Meituan, you name it. Most of these founders are, basically 30-somethings, sometimes late 20s. And when they exit a company, we're talking about tens of billions of dollars, and they need to diversify. So where do they go? Where they made their money, right? Believing the next generation of technology companies that's going to change the world. And we're trying to deploy that money in other parts of the world. Everybody wants geopolitical diversification. So when we think about Asia investing in US, Asia investing in Europe, Americans investing in Asia, Europeans investing in Middle East, etc. So we really do a multilateral kind of investment. And I see that there's still quite a bit of demand investing. Granted, everyone's very, interested in now, sometimes people are looking at defense tech now, which is used to not be very popular, but now we can see deep tech, right? I was just at a Saudi government-sponsored space demo day a couple of weeks ago, and I was seeing this one company that's doing geopolitical, satellite imaging, and then right next to him, there's another guy doing the same thing. And I was like, wait, aren't you guys doing the same thing? And he's like, well, he works for UAE, I work for Saudi. So, some of that interest you can see is actually building in deep tech. We look at Israeli companies, obviously they're doing really well. US and China is constantly in competition when it comes to surveillance technologies, right? So those are some things that I, try to look at it, and we invest in technologies such as LiDAR. We invest in companies that are doing semiconductor. So what's happening with TSMC? They moved some of their operations to Arizona. However, you also see Saudi government give $9 billion to South Korea. Poland is also becoming a really interesting spot for folks that are trying to find the same level of labor that exists in Taiwan. However, now due to what's happening with China, they have to move somewhere else. So we see a lot of interest from the world that's looking at also safety tech. Why? Because the world is becoming increasingly, polarizing, right? Look at Silicon Valley, the ex-CTO of Square was murdered in San Francisco in broad daylight. So how do we think about, as we move towards a more AI-enabled world, how do we protect ourselves? So now we're looking at companies that create emergency tech, right? When people call, how can we help them? We're looking at businesses that create more elderly care, as we discussed last night, as well with Larry and Charles. We're looking at businesses that enable the helpful, community building between humans, because I think that's also an area a lot of people are not paying attention, right? As we create ChatGPT-enabled apps. I was at the Monty's conference in LA, and Charles, who is in charge of ChatGPT's deployment with Microsoft, he said, we only have about 350 apps built on top of ChatGPT already. So guys, they're coming for our jobs. But with that said, how do we think about investing for the future of humanity? So we look at a lot of different areas such as anti-aging. We're looking at companies that are creating methods for preventative cancer care. So anything along the lines of improving humanity for the next 20, 30 years, that's what we're interested in.
So how do you see competition for deals now? Because I suppose it's something that's been, very high on the agenda in recent years, has been that, the competition for deals across, a lot of asset classes, including VC, has been incredibly tense. And you've got incredibly intense, and then you've got you've got new VCs coming into the space, but a lot of like non-traditional VC players, getting into deals as well. They've now all gone. What's that done for competition for deals? And then in turn, how's that shifting the dynamic in terms of how deals are being structured? I mean, you mentioned private debt and the use of that. Have we seen a material shift there in the way things are being done?
I'll just add to from our fund's perspective. So I think there are a couple things I like to cover. Number one is from, how do we help our portfolio companies? A lot more companies are asking us, how do I expand to other areas besides my home country? So let's say you're a software company out of Silicon Valley. You may want to go into Europe. You may want to go to Asia. How do I do that? So we kind of specialize in this thing called cross-border portfolio management now. So let's say you're a Chinese company and, surprisingly, now you're moving your headquarters to Jeddah or Riyadh. Why? Because US doesn't want you anymore, right? So we try to help with establishing companies internationally. On the second point is we're looking at more opportunities where people really seek for advice when it comes to governmental relations. It's funny because 10 years ago when I was advising Alibaba, Tencent at JP Morgan, we know in China you have to have a guy, his job is government relations. Now that title is becoming more and more relevant for everybody because as you establish your companies in the Middle East, how do you deal with DFC? As you ask about the licenses in Abu Dhabi, ADGM. In Switzerland, we have FEMA. In Saudi, we also have their version of the SEC. So we sort of like serve the role of helping them understand the regulatory burden, the regulatory hurdles they have to get through in order to establish themselves compliantly. We invest in blockchain companies. One of the biggest risks I see is that generally the smartest people, the best talents in Zook, the best developers, they're 19, they're 20-something. They don't understand how traditional finance work, and therefore they make blunders that are just so obvious to people who have worked in traditional finance. So what we do is trying to combine the best of both, leverage the smart, the young generation, but also helping them understand what they need to do in order to establish themselves as a credible partner in the new financial world. So we call this Web 2.5, help to actually combine TradeFi with DeFi. Lastly, when we think about the global movement, I think there's just a really pent-up demand for true innovation. Last probably, few years when people think about the crypto world, the blow up with Celsius, with Luna, with FTX, we kind of seen at firsthand how VCs didn't really handle that too well. When Sequoia got into FTX, kind of randomly, and we looked at how that has affected Silicon Valley deal making. One thing I noticed is for those people who participated in FTX, in Celsius, right now they're really scared. So they're really scaling back on how they invest. I know one fund, wouldn't name names, but they invest hundreds of millions into FTX. And after this whole blow up, they are really facing a lot of investor questions. Right? And that, I think, is a good thing because the markets need to understand, right? When we invest, we have to look at the ethical point of the founder, right? I was invited at the seed round cap table for, both FTX and Celsius, and I decided to walk away because when we asked them, what do you think about risk management? The founders couldn't give us a really satisfying answer. So I stayed away from all these companies when all my peers were like, ha ha ha, you should have got into that deal. And I was like, let's see who can laugh till the end, right? So only a few years it took to show the discipline in how to choose the best companies with risk management and also the ethical aspect of the founder. How do they manage risk? How do they manage the basic quality of not taking their clients' money, putting to something else. So these are the things I feel like are really true lessons we're learning from the last 2 years of the crypto market, how fast it went up, and how we can actually improve the way we back the right founders who have the best intention of the customers. So with the bank runs, with the FTX blowing up, I think now more and more people who are the tourists have exited the market, and now the people who are building are the ones that want to build for a brighter future, not for the money, but for the actual innovation on the technology side. So I think these are all really great things that happened, which will help the ecosystem grow into what it's supposed to be. So I think these are, some observations, and we would love to work with founders, here who are looking at actually building global businesses. Please reach out to us, and love to work with you guys.
So I suppose what we can do then, if you have any concluding remarks, we can go through any additional points you want to make, or otherwise we can open it to Q&A.
I'll just add one point to earlier we were talking about. I also think one of the opportunity is actually Asia. I think a lot of people have been wondering what's going on with China. So I started my career, actually went to LSE, and after London, I was lucky enough to move to Hong Kong. From 2012, we did 22 IPOs, with the last one being Alibaba. And then the last few years, you can see, people have been very worried about what's going on with the Chinese tech scene. I have to say, because we've been in this market for the last 12 years, we've seen companies like ByteDance, the guys who made TikTok, right? That was probably one of our best investments, 10x in 1.5 years. We also have seen, what happened to M Financial, which was unfortunate. So I think given where we are in the, geopolitical space, with the aristocrat, let's put it that way, him in place, I still believe in the private technology development in China, because I think one thing we've learned is that no matter what happens on top, the Chinese people always figure out a way to navigate the scene. And what I've noticed is that in the last 5 years, even though funding for Chinese tech has been really difficult, like for us, we didn't do much in China the last 3 years. One is due to the pandemic, 2 is due to valuation being extremely high. 3 is obviously geopolitical risk. However, now is the time for us to go back, because we've seen, the government has done enough damage to Tencent, Alibaba of the world. Now they've said, okay, enough is enough. Let's go back and then try to support a tech ecosystem. So, on one hand, we see private technology companies that are still growing quite fast in the domestic market because they actually don't need international market. Now they don't need the Hong Kong Stock Exchange. They don't need NASDAQ. They have the Shanghai Stock Exchange to actually support the domestic activities. On the other hand, we see a big Chinese diaspora that's now doing business in Europe. They're starting companies in the Middle East. So we actually have an investment strategy supporting serial founders from China, but now they're building business in Latin America. They're building businesses in Africa. You guys probably have heard about China Afrique. That's been going on for a long time. But this time when I visited Riyadh, when I visited Dubai, Abu Dhabi, I was really surprised by the number of Chinese entrepreneurs now in these regions. So I do think that's another opportunity we can pay attention to.
Excellent. Well, thank you. We still have a few minutes left, so we can open up to the floor if you have any questions.
Hi, my question's to Cathryn. like, what's your view on China and crypto? Is there like something changing over there, or are we still in that process, like period where the government doesn't like it, but the people are still using crypto for their internal means?
I have a personal story to share. Hopefully that's helpful. In 2014, I brought Vitalik, the founder of Ethereum, to China. Through family relationship, we met with the CTO of China UnionPay, which is basically the Visa of China. We tried to present the idea. We want to build a decentralized financial world. And I remember my uncle was like brushing me aside, saying, "Well, I don't know about that. We don't believe in this. And then, you guys are like kids. What do you know, right?" And then we showed him what we built through our GitHub account, all the code. He was like, "Okay, you guys are onto something." And then he's like, "Well, maybe then I can disclose since you guys are, no worries." He put up his Lenovo computer and showed me his entire master plan for the China digital yuan. So I think it's not that they don't like it. I think they're just going to do their own thing. And clearly you can see what's happening with the central governments rolling out their own currency. So I don't know, I don't have the perfect answer for you, but I hope that, shares a bit light.
Hi, great session, thank you. I have two questions actually. One of them is, what are your thoughts about the emerging new VC models, for example, decentralized autonomous organizations? The second one is, what's the scope for impact investing in the current market conditions?
So I'll answer the impact part first, if you don't mind. We have a huge belief that impact investing will be very profitable. We are investing quite a bit in decarbonization. So companies that are building businesses like regulating carbon credits. We're also investing in companies that invest in minority founders, because that's also a huge opportunity. If you look at Silicon Valley, half of the developers are Chinese or Indian. Sorry for being politically incorrect, but it's that truth, right? When we founded a lot of the companies founded by PhDs from UC Berkeley, Stanford, usually, the CTO is always the one that's relatively quiet, may not be the best speakers, but they have really cutting edge technology, and we try to help them, fundraise and help them to grow. When it comes to impact investing, for example, on the deeper, like deep tech, we're looking at companies that, input biochar underground so they can grow plants, vegetables that can absorb 10 times more CO2, right? So we're finding companies that are really changing the world by using new technology for sustainability. We're looking at vertical farming. We're looking at companies that are doing, renewable Bitcoin mining, for example, in Norway. We're looking at a business that's now based out of New Zealand. They're also creating alternative energy sources for planes. So there are quite a bit of development in sustainability, deep tech, and we are definitely proponents for that. But one thing I really love, and us female founder, myself, I like to invest in people who are normally not part of the typical, entrepreneurial ecosystem. So we do fund a lot of immigrant founders and also minority, women founders.
Okay, we are out of time, I'm afraid. So Mike and Cathryn, thank you very much.
Great pleasure.
Thank you.
Thank you.